power grid.
Okay, let's discuss macro. Tomorrow, Reserve Bank of India is due to declare the credit policy. So, what really could dictate tomorrow's credit policy? Let's debate that with Indranil Pond, Chief Economist with Kotak Mahindra Bank. Indranil, what do you expect Reserve Bank of India to do tomorrow? 25, 50, or no rate cut?
We are on nothing actually. No CRR, no repo, no reverse repo. That's our position as of today.
Is that a very conservative stand?
I don't think so, because what the Reserve Bank has been very clearly saying is that let's not look only at the WPI. In fact, in one of its latest speeches, Dr. Subbarao has clearly been also saying that the core as a concept in India might not be working out in a very strict way, simply because the food and the fuel constitutes quite a significant bit of the overall inflation, and you can't really leave those aside to understand what your underlying inflation is. Number two, the concept of core is good enough when there is just a temporary blip in either the food and the fuel, which is not the case at this point in time in India. And if I do a sort of a comparison cross-country, then food inflation is on a rising trajectory in India within Asian countries, whereas most of the other Asian countries are actually on the lower side. So I think everything taken together, it does not give too much of a hope in terms of inflation expectations moderating at this point in time, and that is what the Reserve Bank of India should be very guarded about. Plus the other thing obviously is that we have not seen any fiscal consolidation from the previous policy till today.
Indranil, you just pointed about inflation, and do you think with a weak monsoon and almost a drought-like situation, it's only going to get worse from here?
Obviously, we have to look at food inflation actually going higher, and given the fact that there are a lot of linkages out of the food economy for the Indian economy, it is very easy to see the food inflation sort of, even though it is a supply side issue, sort of getting passed off to being a more generalized inflation for the Indian economy. And that is something that we really need to analyze and see what is the extent of pass-through, and hence the RBI would possibly not be in a position to reduce rates immediately tomorrow, but factor in the full implication of the monsoon, both on the production side and more importantly on the prices side, to do its next move.
Indranil, do you think Reserve Bank of India is doing the right thing in order to control inflation by the monetary method? Because the key problem is the supply side issue. It is not about a 25 basis rate cut or a rate hike.
Absolutely. I think rightly said that both the fiscal and the monetary stance needs to move together in terms of moving the economy away from the slowdown story that we are seeing. But unfortunately, there is absolutely no room in terms of the fiscal, and therefore what we would be looking at is some amount of pass-through in terms of the administered fuel prices to create that room. And till that point in time, it is very difficult for the monetary policy alone to provide that buffer in terms of the leg up in terms of the economic momentum. And the other point that the RBI had been clearly mentioning, and it has mentioned in the last policy statement also, it is not absolutely sort of a one-on-one correlation between interest rates and investments. Any drop in interest rates therefore might not be able to immediately lead to higher investment demand, while as the threshold level of inflation might once again be breached if interest rates are coming down immediately. So weighing all these factors, I would sort of say that the Reserve Bank needs to be on a pause at this point in time.
Okay, Indranil, good speaking with you. Thanks for taking time out as always. Well, clearly all eyes on the RBI, which will declare its first quarter monetary policy review, that is tomorrow, and at a time when growth concerns clearly are mounting, even as inflation is still high. There isn't much of a consensus among top bankers. While most of them are hoping for some relaxation, not too many are optimistic.
For CRR cut, I think last time they skipped, so there is a strong case for a CRR cut. And globally, I think the monetary authorities have taken upon themselves the task of rejuvenating the economy, and one thing they can contribute by moderating the interest rates.
The liquidity situation systemically has improved substantially. So as far as the the policy rates are concerned, I guess RBI has made it very clear they're going to balance whatever is happening with regard to inflation, growth and so on.
Considerations for a CRR in terms of liquidity injection are far, I would say, abated. I think on the repo and reverse repo, it's anybody's guess. I somehow get the message that there may not be much of a change.
We are expecting a cut in both the rates, especially the CRR, to some extent, which is basically, though the liquidity is not very big issue at this moment, but I think it will certainly decrease the cost of resources.
As usual, RBI should be in a position to support the liquidity required for the credit growth. As your rates are concerned, I don't think I have anything to predict. It's the RBI who will look at the inflation and decide on the rate policy.
Well, tomorrow, of course, is the big decider, but thankfully for us this time around, I guess Reserve Bank of India has done a great job of drumming expectations this time around down. So, off the record, on the record, what time and again has been communicated from Reserve Bank of India is that we should not expect a huge rate cut. The environment also is not perhaps conducive for a rate cut. Three things which Reserve Bank of India is monitoring very closely. Number one, monsoon. Number two, news flow from New Delhi. And then third, I would say crude. So on all these three parameters, even though growth is down, investment cycle has broken down in the near term, there is a cross which I'm sure will force Reserve Bank of India maybe not to announce a rate cut. Ashwini, it's all about expectation management in the near term, and given the way how PSU banks have moved in last 4 or 5 days, looks like traders and money managers, they expect nothing from Reserve Bank of India tomorrow.
I don't think PSU banks are moving down because nothing is expected from the Reserve Bank. I think it's a derating, and that is when you have falls for 10, 15, 20 days in a row. I mean, for the last 12 days, PSU banks have been falling. I think money is consistently moving out of there and moving into the private sector banks. So this is not a 1-2 day correction, or it's happening because rates are being hiked or lowered. This is just simple derating because NPAs, etc., are way out of whack, compared to the private banks. So chances are that they may, even if there is a rate cut, you may get a pop, and then these banks would make further new lows.
Okay, some bumps coming in for Pipavav Defence after the hammering that the stock saw last week. Pipavav Defence is currently up by about 5% or so. 58.50 is where the stock is. Mitesh, would you sell into the move today, or do you think the stock has now bottomed out in the near term?
See, it's bouncing back after 2 days of very strong declines, I think, so I think it could possibly bounce some more. I think, it's fallen from levels of 80 to as low as about 50, 55, which have been historically critical support levels. I think we might actually see the stock heading towards levels of 63 to about 65 on the upside before the bounce back kind of stems, and that's the level to sell out. I think I'm not very, keen to suggest buying into or accumulating into this stock. I think this looks like purely a technical bounce back which should be sold into around the levels of 64, 65.
Mitesh, Infosys 2183, do you think closer to 2100 or slightly below 2100 Infosys has a firm floor in base?
I think the level actually is around 2150, but we have had a closing below that, and we have not cracked actually, given the fact that the Nifty has managed to bounce back some way. So I think 2150, 2100, if that is being violated, I would, possibly look for the stock to test levels below 2000. But for the timing, that's not happening. The CNX IT also has managed to get past the 10-day average and possibly, hinting at some kind of stabilization. As I mentioned, I think the Nifty on intraday charts has stronger signals than we had on Friday, and I think I would feel that 5180, 5200 should be tested in a day or two. So I think in the short term, maybe the damage is kind of being arrested. I'm not sure whether this improves the longer term picture. So I'm still negative on Infosys, but not at current levels. I would possibly wait for some kind of rally to happen, or another leg of downtrend, or some kind of evidence of down move below 2100.
ICICI Bank is indeed the biggest gainer on the Sensex and on the Nifty. HDFC Bank is also up, but it is up only by 4 rupees. You ask any fund manager on the street, and if your question is that which is a better business to own, I guess the easy answer is HDFC Bank. But which is the better stock to own at current valuations? I guess the obvious answer is not HDFC Bank, it is ICICI Bank. I'll just give you some numbers here. HDFC Bank, based on FY13 estimates, is wildly expensive. Indeed, one of the most expensive bank in Asia at about 4.5 times. ICICI Bank is trading at something like 2.2 times. And I guess somewhere markets are now getting more and more confident that ICICI Bank has managed to deliver. I think for 5 quarters in a row, they managed to grow in the range of about 20% plus. Ashwini, ICICI Bank is up by about 5%.